The Salt Lake County Auditor's Office recently conducted an audit of the Salt Lake County Justice Court. The audit found 25 findings that can be categorized into three main areas of concern. 1. Lack of internal controls. 2. Questionable activities. 3. Not following county policy. The entire report can be found on the Salt Lake County Auditor's website at www.slco.org/auditor. Let's take a moment and discuss some of the specific findings. 1. Lack of internal controls. The same employee that was performing cashiering duties was also maintaining accounting records and performing the reconciliations. This lack of internal controls can put the Justice Court at risk of mismanagement of funds due to poor segregation of duties. Additionally, payments were processed via direct deposit without approvals from management. Management approvals help ensure valid payments to vendors. 2. Questionable activities. The Justice Court bought a license of QuickBooks from an employee's personal business. This is not a good business practice as it might violate QuickBooks terms and conditions and the employee could profit from the sale. It also does not follow County Policy 1430 on professional ethics and conflict of interest. A desk and credenza costing almost $7,000 purchased for home use were not added to the capital or controlled asset list per county policy and were not competitively priced or documented per small cost purchasing procedures. 3. Not following county policy. Many of the funds and accounts of the Justice Court were not reconciled at least monthly, accounts had been used for at least 1 year, and funds were not deposited within 3 days of receipt. Records of trust account activity and trust reimbursements were not always accurate and complete. Recommendations. We recommend that the county ensure training is occurring for all managers. This training should cover existing countywide policies, state policies, and county ordinances, as well as best practices. We strongly recommend that no one Justice Court employee perform both cashiering duties and signing checks to strengthen segregation of duties. Additionally, the Justice Court should develop additional controls documented with written policies and procedures for processing payments and recommend funds received should be deposited within 3 days of receipt. The Justice Court should close accounts not in use and make sure that account custodians and bank signatories be updated when staff changes. Also, any controlled asset at an employee's home should be documented on the asset list, and we recommend a plan on how those items be returned to the Justice Court in the future. State law and county policy require employees with a conflict of interest to annually file a disclosure with the County Council. An employee of the Justice Court has an LLC which is selling software to the Justice Court. We recommend disclosing a potential conflict of interest and perhaps a competitive bidding process for independent vendors.